What is up?
Yeah, what's up, everybody? Welcome back for episode 8 of Market Close. We're hopefully going to be doing more of these as I get a little bit more time to do these end of market lives. So, thank you guys for joining in. We got people coming in from all over. So, and there's quite a bit to cover and some expectations, some cool, no, I wouldn't say cool, but some interesting topics to talk about as
You
we
know,
are coming to this summer of 2024. Sorry, go ahead, Cody.
oh, you're good. I haven't checked my portfolio in a minute. Like, I haven't been checking it recently, so I just feel like something eventually is going to happen because when there's moments like this to where the market feels boring, at least for me, because I'm heavy in alts. Now, if you're all in Bitcoin, by all means, this market has not been boring for you. But if you're in something like Quant or like Polkadot, it's kind of been boring.
Excuse me. Indeed, it has been. And this is just the summer. This happens with both crypto and stocks and overall investing. People, you got Memorial Day, cookouts, reunions, family events, graduations, a lot of things that people aren't really focusing on traditionally on investing. Like right now, it's more of like, hey, summer vacation starting, the kids are out of school. The average retail investor is kind of focusing on life events right now. So the market kind of hits kind of a nice lull in both stocks and crypto. But as you guys come in, if you guys could like and hit the like button for the live, as you guys know, this is always sponsored by you guys, and we got quite a bit of you guys in here. So hopefully we can spread this out and get more people in. As you guys know, we're a new channel. We love talking about all things business, finance, real estate, investing on this channel. So definitely happy to have all you guys in here and hope you enjoy this show here. And if you guys want to watch any of the replays, definitely go back to our YouTube channel and go look through all the live events and all the videos. We don't delete anything. It will all be up there. And also, we have it on Rumble. If you prefer not to use YouTube, you want to go on the Rumble, it's also on Rumble as well. But we keep everything updated on YouTube. But with that said, guys, let's go into just some quick market updates here. Of course, we got the greed and fear index at 62. We have the crypto market cap at 2.6 trillion, up about 1.75%. We got the total volume about flat from yesterday at $81 billion. And Bitcoin dominance and ETH dominance still the same as yesterday, 53% for Bitcoin, 17.5% for Ethereum. But of course, we got Bitcoin back over 70,000. Ethereum climbing back up into the 3,800s. We have Solana back over 170. XRP still at 52 cents. We have Cardano at 46 cents. We have Chainlink just coming up to $18. We got Polkadot back over $7. We have Litecoin still holding the low 80s range. We have Hedera holding the 10-cent range. We got Caspa maybe finally trying to break that 20 cents. And of course, we have Quant, which we got to go down a little bit for, but we got Quant at 91. And it's been holding steady there. So we might not see an 85 on Quant for a while with that. So if you guys are expecting Quant to go lower, it's probably not. I don't think the market's going to go any lower than what it has been. We're going to have a lot of people dollar cost averaging in, especially people who are watching the crypto markets intensely, just trying to time the best times to buy in. We have the stock market still at all-time highs, although they're coming down from the actual all-time high. So we're starting to see a reduction in prices on the stock market, leaving us here and with a lot of crazy things. We also had on Sunday, I'm sure you guys have been paying attention, we had Roaring Kitty post about GameStop stock, and he had over $210 million in his portfolio invested in that, which has netted him from that pump $89 million from that. But if you have been holding it and you bought in late, you have lost 50% of what you put
I
into it.
wonder if Roaring Kitty cashed out because he didn't make anything if he didn't.
No, his call options are on the 21st. So,
Really?
yes, they're on the 21st. So I'm kind of interested to see how that's going to go. But as far as GameStop, I mean, we could pull that up here. Let me just go up to here, market watch. We'll pull up GameStop.
What I wonder what's so special about the 21st.
I'm not sure. Maybe well, there's no earnings report. There's nothing right now about it. We go to the last 5 days. I'm going to share the screen because here we got GameStop pulled up. As you see, the announcement happened like during after hour trading, and it immediately went up. As you guys know, during this time period, I think it hit like $45 during that time frame, and a lot of retail investors saw the tweet and started buying again. And now, of course, it's settling back down to this low 20s, which is probably what the true value at the moment is. But you guys got to be careful because that, to me, that was clearly a pump. And what Roaring Kitty did is illegal by the SEC. I don't know if they'll go after him or not. It's you can't kind of advertise a position, but it wasn't done. Um,
You can't advertise a position.
you can state your position. If you're a publicly traded company, you have to. Like Berkshire Hathaway has to show what it's investing and holding, or if you own more than 7%. He might actually own. It depends because if he doesn't own more than 7% of GameStop GameStop, but I don't think he does. If he is a 7% or higher holder, then he has to announce what he's doing with his shares to the public, whether he's buying, selling, or whatever. But I don't think he's that high. But it's clear that this was a market manipulation because it doubled in value, but he hasn't sold any of his stock. But it doubled in value. Now that doesn't mean he could have doubled it in value and then took a loan against the leverage out the holdings he had, which is very possible. Um, I don't know, but if they're getting Trump on that same thing with True Social, then they have to get him on this because it's the exact same play, the exact same play. Like, car, it's the exact same motions. Tweet, stock goes up, cash out, and cashing out doesn't have to mean selling the stock because you can cash out by leveraging the value of your holdings, like Trump did to cover his bonds. So it's kind of an iffy area, but it'd have to be left up to the SEC lawyers, which since he's not really like a prominent figure, as much as a lot of people know him, he's not a prominent figure. Like he's not like a CEO of a Fortune 500 company. He's not, and he's just a trader. So, and he's a no-name trader, not attached to any agency. So they probably won't even be bothered with him, unless if it just turns out like there's other nefarious things going on. But he doesn't. From what I've watched of him, doesn't even sound like he's that type of person. But that's the only thing I would say. Be very very careful because when these type of events happen, by the time you see it, you're already too late. And if you try to get in then, so like let's just say you saw the tweet on Sunday night and you put your order in, well, your order won't get processed until after the other orders in line got processed. So by the time Monday opens and your orders are getting processed, you could end up paying at the top without realizing it, and then you lost your money as it's going back down. So that's why you got to be very careful with these things. And I know I posted about it a couple times, and you know, I do get a lot of pushback from you guys on it. And it's like it has nothing to do with diamond hands or anything. It's like overall, this company, GameStop, is not viable in the next 5 years because even consoles, even the video game manufacturers are doing away with consoles. I think Sony is the only one announcing a new console in the next couple years. They said the PS5 is already at the end of its life cycle. Uh, Xbox is not making another Xbox.
I
Microsoft's
thought
not making
PlayStation went through 7 years. Oh, it's almost because they've made a console every 7 years. It's been five
yeah,
almost.
Yeah, so they already said it's coming to the end. It's got another 2 years left, and they're already in development of the next console.
I've
Although,
only owned my PS5 for 2 years.
yeah, like you see what I'm saying? Time goes by fast, and I don't know what that one's going to price because the the PS5 was pretty high, and the Xbox One, and then now with the
But you
next one
said they're
coming
doing
out,
away with consoles?
yeah, it's you don't really need a console as much, and they're for most people, the gaming PCs that people have been custom building and the custom suppliers have been making are far more powerful than the consoles. But I don't know. I don't know the technology that well. All I know is that despite a lot of people being involved in gaming, the sales and the industry itself has been dwindling down. So this might be the end of GameStop, especially with digital downloads. GameStop was all about resell, like reselling the consoles, reselling the games. Don't buy the game brand new. Come to us, save half the price, and buy it used. That was their whole pitch through the 90s, well, through the 80s, 90s, and early 2000s. But then once 2010 came around, the games started getting a little bit more complex. Then digital downloads started happening around, I think it was like 2014, 2015.
I'd say around 2015 era, this started really hitting.
Yeah. So then that's where GameStop started to slowly decline. You guys got to remember in 2012, this was a $3 stock. Like they did not think this was going to make it. And then there was a rumor that games weren't going to be tradable, meaning if you bought the game and you put it into your console, it was matched to your console and you couldn't move it. So people were scared of that, and then the stock tanked because I remember at that time I bought a little bit of GameStop at $3 because I thought that was ridiculous. No one's going to get rid of that. Let the kids. I got one game, the other kids got the other game. They're going to come together for that's what kids do. It didn't happen like I thought, and it went back up to 18. But then as the digital downloads came down, I saw like GameStop's days are numbered, and this is probably another long company that's been around for about I think 50 years that will eventually bite the dust
If
because
you would
it's
have held that stock though, you'd almost be up 10x.
yeah, but I sold it. It was at $17, and I had expenses at the time to pay, so it was just a nice up and cash out and pay my expenses at that time. Because I was
That's fair. I
moving.
would never invest in GameStop, period.
But I didn't think as soon as I saw where it was going with digital downloads on the PS4 and everything, I was like, okay, this isn't going to be a viable company for much longer. And I'm surprised we're even now, 10 years later from that, where it's still around. I don't think it hasn't really changed since the 2000, like the early
And
2000
that's why
eras.
it's a meme.
Yes, it's really just nostalgia and people just going diamond hands, diamond hands. That's all the value. If you take all that away, GameStop has nothing, and they would have went out of business a long time ago because they wouldn't have been able to borrow the necessary money against their stock to keep the operations going. But if you have to borrow money to keep the operations going, already the company is on a downward spiral. So I don't have a lot of faith in this. And if people don't cash out there, because there's a lot of people that put their retirement savings into this, it's going to be very bad if you hold too late because then you're going to lose everything and it's not going to be good. But that's all I got to say about GameStop. We're going to move back over to the crypto side because we got to talk about these meme coins like Dogecoin and Pepe Coin. Uh,
Oh
yes, if
yeah.
you invest in Pepe Coin, I'm going to pull that up for you guys. But if you invested in Pepe Coin 2 years ago, you would have made money. But now is not the time to do because like it doesn't have anywhere else to go. And I have a feeling it's going to go down. I just have a feeling it's going to go in a downward trajectory because like as you can see here, we've already had the pump and now it's going to go headed on its way down. So last year if you bought it last year, you could have bought a lot and like quadrupled your money on it. But it's such a risky play, and Cody and I aren't in this type of risk. Like it's just too risky, in my opinion, to try to time these tokens because there's no value, and it's all around just hype. And right now, there's just hype around the Pepe coin, but like Dogecoin and Shiba coin, there's just hype around them. That's all there is. And I wouldn't be surprised if you start seeing more celebrities start tweeting about them again. And then, of course, the value will start to go up. So I'm just not sure that this one's probably going to make it through the bull run, and then you're going to see someone say I became a millionaire off of Pepe coin, just like a Dogecoin, the Dogecoin millionaire, and then they're going to lose it all because they didn't cash out because it's like, oh, it can go higher. It already went to the high, cash out, protect your profits. If anything, these meme coins are a prime example of if you do make money, cash out your profits and move on with your life. Don't try to think it's going to go even higher because when you get too greedy and too euphoric, that's when you lose everything. And definitely don't leverage against these things because since there's no value attached to it and it's just retail investor sentiment attached to the meme coins, it's so volatile that as soon as whether you go up or down on your leverage, you're going to get liquidated out because it's going to go in the opposite direction. If anything, it's kind of like a lottery ticket. You put $500 towards a Powerball and just leave it alone. If you win, you win. If you don't, you don't. That's how I feel. So, but
I'm mainly buying Injective right now. Sorry if I sound all clogged up. I'm sick right now, but Injective is on my watch list for sure.
oh, no worries. I'm just saying, like, just be very careful of those meme coins and crypto in general. It's like a lot of the a lot of the pump and dump, the scam tokens are going to be prevalent again as crypto becomes mainstream again. And of course, you can't. It's hard to tell, but if you see someone that has no business, never dealt with the industry, like if you see some type of random celebrity, like I can't believe the people that fell for Kim Kardashian pitching a coin. Like if if someone who only does fashion is talking about finance, that means don't get involved with it because odds are they know nothing. They're just a paid promoter of it, and so many people came and went with these scams, and now the SEC is not the SEC, but the FBI is cracking down on this because whether or not crypto is regulated by the SEC does not dictate whether or not something is a fraud, and the FBI will come after you. That's all I got to say. And unfortunately, without the FDIC backing like the crypto, like the stock markets have, the crypto market does not have that insurance and government backed regulation. So you can lose everything if you're involved in the wrong projects on this. But as we talk about projects and a good altcoin, Chainlink also put out another 3 videos on their YouTube channel, mostly talking about interoperability and gaming developers. That and there is one I haven't watched it yet about their Web3 crypto DeFi platform that they're trying to integrate in with all of this. So I think they're trying to bring like a crypto bank to it, so that way you can use it for your play to earn on these type of play to earn games. They're not quite as big as Dot. I think Dot hasn't beat in the gaming sector and developer sector. I do think there's more validators on Dot than there is on Chainlink. I'm almost pretty sure about that. But what I like about Chainlink is that they're always posting videos as to what they're doing. Like they're doing like a live conference. They let people ask their questions and then they post those videos and they don't take them down. So you can see where people are going, where things are going, how things are developing with the platform. I think that they're going to be a good. I still think they're rather low for what their price is. But keep in mind, this is all just This is all just speculation right now. Cody and I do see it doing well in the bull run. However, it's looking like the that bull run is going to be delayed even more as we keep going, because I think that everything's going to be stagnant through the summer and through the fall. I don't think we're going to have the bull run that everyone's preparing for till about this time next year. You gotta let the market settle, gotta let all the other events in life settle, and then you gotta let the economy settle out, which it's kind of in that beginning stages right now where everything's settling, and then people are just kind of getting back to their trying to grab a sense of normalcy. So I think people have figured out their budget for this new economy and are starting to figure out how to start pay down debts and start putting money into investments. But retail investors are mainly going to put money into high yielding investments like crypto, which will also be high risk. Unfortunately, they're not all going to put it into the more stable projects. They're going to put it into the absolutely high risk projects. So, and if you're interested in getting the average retail investor's mindset, you guys got to check out Crypto Dream. His YouTube channel is Crypto Dream for Us. So if you guys can go ahead and check out his channel, give him some subscribers, because he was our day one supporter, and we always like to give him a little shout out because he does have an interesting view from being a blue collar family man who is trying to invest and save for the future and change his financial position in life. And he's trying to do it through crypto. So he has a interesting take on it. But enough about Chainlink. Let's
I wonder if he's still buying Crypto Dream.
I know he has a new position. So he is he got laid off and he found a new position within his field. It's just that it's working him day and night. So it's good that he's still able to provide for his family, and he only went without work for I think like a couple weeks.
Yeah, it took me a month.
And that's kind of going to be our next topic after we talk about quant here a little bit. But in 2004, there's a lot of craziness going on. If you guys are at a job, whether you like it or love it, you got to stay with it. I'm telling you that right now, especially if you guys want to get a house. No bank's going to lend to you, especially in this market, if they see that every 6 months you're switching from job to job to job to job. You got to stick with the job that you have, and they're looking for 3 to 5 years with one employer. So I'm just preparing you guys. That's kind of our next topic after this, but I'm just preparing you guys. Like, if you think you can get a house by just bouncing from job to job because it's not absolutely perfect, I'm telling you, you're going to be in for some bad news. Going to be in for some bad news with that. But anyway, I want to talk about quant. I did see that there were quite a bit of buys on quant. I think it's still happening. Let's check up KuCoin here for quant. I think it's still happening. Yeah, I'm seeing huge chunks of quant. Not like overly large quants, but like you see 58, 54, 43, 20, 129, 10, 10, 11. I see some dust getting bought. Those are retail investors, but I'm telling you right now, it seems like people who are able to buy up bigger portions are buying up the available quant that's out there. So I don't know how much is on the exchanges at this moment, but I can tell you right now they're probably pretty low. I always know a good sign as to how low the exchanges are is when you can look at crypto.com, because they'll always give like $5 or $6 higher on quant if they're low on quant. So if I see that crypto.com is much higher and there's a arbitration move, then I could tell you right now, I could tell then that there's a low volume of quant. I also think the big Fidelity, Vanguard, BlackRock, JP Morgan, and Bank of America are buying up quant because they're looking to utilize the quant network, which makes sense because they're the largest They're large. J.P. Morgan basically J.P. Morgan Chase and Bank of America are one of the largest producers of mortgages in the United States, which they're probably aiming for tokenization of real world assets. Vanguard, Fidelity, and BlackRock are the biggest holders of mortgage based securities, which would also benefit from tokenization of real world assets. And I think they're making their bet on quant. It would make sense because there's a lot of people, not just the top people, not just the top management of the quant, but the people they're hiring are coming from those businesses for like management, middle management, IT. Just they're coming from all the fields they need, or they're kind of hiring from those areas. So it's just a little interesting to me that there's that type of activity because I'm scoping through the jobs as I see available jobs, and like I saw on Indeed, there was a Web3 position in New York City, but it didn't really say who was the company. But I think they were hiring for quant because I saw like a bunch of them and then they disappeared, and they had like over 3,000 applications, like 3,000 people apply to each position. So to me it sounds like they're putting that out there just to do their due diligence, but they're hiring from where they want to hire. And I think quant's been too quiet, too boring, and should be making a move in the next couple months soon. I mean, if it follows what it did, if we go look at, if I can I pull it back a little bit more. Don't want to pull back because like if you look at where it was about a year ago, about 6 months ago. Like you see here, 85. Then we had the hype around Christmas and Thanksgiving, then the tax season right here. But now the hype is gone, and it's kind of reminding me like right here, kind of the same thing. Like you see here, we're just coming down off the market in 2021, and then all of a sudden, 2022, it just starts getting boring. And then right here was the FTF. Like we started seeing these crypto exchanges collapse, like FTX, Voyager, Celsius, Luna, and then it got started climbing back up. We had that fall hype, and then down, and then we had people buying in again during the winter once tax season, and then just went boring again. See right here. I think it's a be a good time dollar cost average in, as you're going to be in that we're going to be in that boring sector up until about October, and it's probably going to start winding up again. So you won't get as much as last year's was, but it might go from where it's at 91 to probably 170, 180, because there's not a lot of sells, not a lot of buys, just kind of steady, almost starting to behave like a stable coin. So I don't know. I'm not really too worried about it, but it looks like it's just a good opportunity, as it's following the exact same chart path it did for the last 2 years. So that's a good signal. That's probably going to do the third time is going to be a repeat. I don't know. There's really nothing else news under crypto. Um, I haven't had a chance. I know Dot has had some activity, but I just haven't had a chance to read it yet, guys. So I'm not too sure if there's anything new or relevant that they posted, but I know they just been posting stuff that's going on. I know Cody's been following Dot a lot more than I have. He also has a lot of Dot staked, uh, as do I. So you guys tell me. You guys mentioned in the comments or in the chat if you guys want us to do another deep dive on it. Um, but as far as I can tell, it's like it still had a great price, still a good chance to dollar cost average in.
You know, my dream portfolio is owning one whole Bitcoin and one whole Berkshire Hathaway share. I want to own one whole Berk and I want to hold one whole Bitcoin.
Yeah, well, I don't know how Berkshire Hathaway is going to do. I mean, it was totally reliant on Warren Buffett and Munger, but I'm sure they've trained and developed someone over the last 20 years to take their place. I'm I mean, we gotta take heed that Warren Buffett is coming up on 100 years old. How old is Warren Buffett? You don't even know. I don't even know. Yeah, he's 93 years old. So keep in mind, he was around when cars were just starting to become mainstream. Like like he was a teenager when Henry Ford was building his empire. So it's his
So he's got 7 more years and he's 100.
yeah, 7 more years and he's on. Should I put 1931 is when he was born. So 2031. So you can imagine, like, in his lifespan, how much we have changed. The society and technology has changed. I don't know if his perception of what is valuable. I mean, his method for finding stuff is still tried and true, but like his understanding of what would be the next thing, because he's lived far longer than 80, I think 85% of the population, and he seems in good health, so it looked like he could live well into the hundreds. His perception of what people need is now becoming out of touch because and that's to happen to anybody who's lived almost a century, like, especially if you live through. I mean, he was
Yeah.
born at the end of the industrial age, moving into the age that we into the phase that came after World War II, and now he's lived past the information age, and he's living into the change, or we are changing into the nano age. And I just want to say, guys, like, the nano age is kind of like the make or break for society. It's either you are part of the group that pushes forward, or you're part of the group that gets left behind, and you fall into the hedonistic phase where you're just focused on self. And unfortunately, when the nano age happens, when it really starts, when you could physically see it, it's too late if you haven't made the mindset change to get to where you need to be for that. Because we're not talking like, oh, you're going to be like, the hustle's going to survive. Like, the economy is going to be vastly different. And the nano age is stated to come when humans start living longer than 150 years, which is now going to be possible. If you don't think, if you're kind of in doubt, like, keep this statement in mind. If you're doubting this, just keep this statement in mind, that the person who's going to live for 1,000 years has already been born today. Because by the time we make advancements in anti-aging and healthcare and everything, they'll be alive to be able to participate in that, and they'll live long enough with that procedure to live to the next advancement and the next advancement. So the people who are going to live, basically the people who are going to live forever, have already been born. However, the only ones that are going to be able to do that are going to be the ones that are able to transcend with the nano
You're
age.
talking about living forever.
I mean, if you solve the telomere problem, where humans age because you lose collagen and your body processes slow down because your new cells have lost a bit of DNA as you kept replacing your cells over your lifespan. If you solve that, then the only thing that's going to end your life is just a freak accident.
God, and that brings in the topic of God because I feel like God doesn't want us to live forever. That's not what His plan was.
I don't know, but we don't know. But think about it this way: our minds have more storage capacity, have so much storage capacity for memories, for data, that you would have to live about 1 million years before you can really start losing memories through having to replace them with new, like you couldn't put a new memory in because you'd have to delete a previous one. Like that's crazy. That's crazy to think. Like is the amount, because nothing we have right now can store a human brain. And we're also working with there's robotic companies working with organoids, which are small human brains made with derived from stem cells, to and they're testing them with robotics and stuff, and they're finding all sorts of, like, the concepts we had in 1980 are completely overwritten by what they're doing now with it. So it's just very interesting. It's just very interesting, and that's kind of like where we're headed. Like, as much as people say we're kind of headed to that merger of man and machine, the next big thing is this going to be ethical? That's my only thing. That's the next big thing. Is it going to be ethical? Anyway, moving on to stocks. Moving on to stocks for you guys. Um, well, we only got really one, and we talked about this.
One
Yes,
year
about
ago
a year
today, we talked about it on stream
Yes.
because a screenshot from my Snapchat memories popped up 1 year ago today, and Carvana was at $24. Now it's at 100.
Yep. So we were talking about Carvana and how it was surviving. Now, the big thing was we did not know at the time if it was going to get back to positive earnings. So as you can see here, we saw when we talked about it, they were in the negatives. But Q1 of this year, they posted positive earnings, positive 39 cents per share. And they're anticipated to make 20 cents, but I have a feeling they're going to make more. And it's mainly because the values changed. They've already written off the loss on those G wagons. Um, Consumer sentiment has changed about the dealership. Like, millennials and Gen Zers do not like going to dealerships. They don't like it. They don't like the sales process. They don't like the car salesman vibe. They don't like that big corporate dealership vibe. And I'm seeing that with the luxury cars, because they've completely changed their model. Like, they're not salespeople. They're just called they're called auto consultants. So they're not there to sell you a car. They're there to help you get the car that you want. That's kind of like what they're doing. And instead of having the cubicles, the hard sell, the all the tricks that dealerships use, like I know back in the day, it was like, my parents always told me don't give them the car keys or anything like that. Keep your car keys so you can leave whenever you want, because they'll hold you until you buy that car. Like that, like that's how dealerships used to work. And now millennials and Gen Zers are like, screw that. I'll just buy it online. And if they don't like it,
Wait, the car
it's
you
different.
drove to the dealership to get there, they'll hold those keys if you don't buy the car back then?
Yeah. So basically, when most common thing, if you were going to get a new car, obviously you were trading in your existing car, right? And most people would hand the keys over. And once they have those keys, the manager then would hold them. There's you can go back and look in any city, you'll see countless complaints to the police districts about, I'm being held against my will, or they won't give me back my car keys, they won't give me back my car, things like that, because they just said they've changed their mind about getting a car. And that was because back, 20 years ago, 20 plus years ago, most people, you only got a car if you really need it. And they really tried to stick to their budgets of what they had. And I could tell you right now, and I worked in a Honda dealership, like most of they were hard sellers. they would strong arm you into buying a car, and that was the reason why I was kind of pushed out because I didn't strong arm. I just if you liked it, get it. If you don't, hey, thanks for coming in. That was my deal. If they asked for keys back, I always gave the keys back, and I ended up being the highest salesman for the 2 months I was there for it. But I don't think Gen Z and millennials are going to like that process, and I think the dealerships are done. Now, it was rough for Carvana, and I still don't like the fact that Carvana is run by a father and son team that have been involved in an alleged scam and Ponzi scheme before. Now it's alleged. They weren't arrested. Nothing happened, but it's alleged. So I don't know. And the fact that they were cashing out record stock at the all-time high of this company further doesn't do well for me. But like I said a year ago, there is value there because I could see people liking the system. It's very fluent and efficient. The website, like, let me just pull up Carvana. Let's see if I can pull up their website.
I wonder if it could ever go to 1,000.
I don't think so. There's a lot of lawsuits and they're banned from several states for selling cars
Gotcha.
because they did not handle the paperwork right. Now, a lot of you guys, maybe you're young, you're newer, but when you get a car, you're supposed to get a title with your lien holder on it, your registration paperwork, the dealership's registration paperwork, the list of where the car has come from, especially if it's a brand new car, port of inspection, customs release, all this stuff, right? It's like a 30-page packet that they're supposed to give you, and then you take that packet and you go over to the dealership and you register the car to you. Now, New Jersey, Florida, New York, Pennsylvania, you can do all that at the dealership now. In like Arkansas, Texas, Alabama, Mississippi, I think Tennessee, all the southern states, a lot of states, you have to get that packet and then you can go to the tax assessor and you got to do all that stuff. So it's they didn't do the paperwork right for a lot of things, but they also lost a lot of money on trading values because they gave it on basically what the information the person was putting in, not assessing it, not having someone physically assess it. But Gen Z and millennials like that, and I think that it will bode well. I think they're going to beat their earnings by like their estimated 20 cents. I think they're going to go to maybe like 50 cents for the earnings. Maybe 50 cents. So I'm not expecting like a huge jump, but I think they're going to start making more money, especially since banks have cracked down on the fraud, and the idiots who've been doing the CIN numbers have all been weeded out and basically arrested. So now Carvana, when they're selling a car to someone who's buying it on finance, it's an actual person that they're doing it to. Because during the pandemic, they were hit with a lot of fraudulent loans as well because it was all done over the internet, and you don't know until it gets to the person who's auditing all your sales and they say, oh, this one was fraudulent, and then of course the person's gone, their address has changed, the car's gone, and there's nothing they can do. But they were still making enough money that they didn't really pay attention to it. Now they're paying attention to a lot of things that they should have been paying attention to as a company. I know that the people have said that the buying experience has performed better, is better than it was 10 years ago on it. So as you guys can see here, this was about the time they went public, and this was where a lot of people did not like the buying experience. But now here they've fixed that, and now they're back on track for I think a good experience, good customer, adding good value to the customer, and giving a fair and honest price for a fair and honest product. And I think that will always win out in the long term. and I don't see it going to 1,000, but it could go to a couple hundred before it hits a stock split, which it's most likely going to do if it gets back up to the cup, like $200 or $300 range. So it was a good buy. It had some still reasonable risk, but a good buy a year ago. Still is a good stock to get involved in right now. I personally don't have any, so like I'm not paid to show. I'm just calling it like how I see it as a broker, as a licensed broker. That it's something that I definitely would be looking into, or watching, or maybe dollar
You
cost
know,
average.
honestly, I found a I'm not even gonna lie to you. I found a really good deal on that 2018 Lexus I want on Carvana. They have a 2018 Lexus with 50,000 miles, and they want $22,000 for it. And it's a clean title. Good deal. That is right at the value. Man, I wish I could order it right now because it's a really good deal. Like that, I will say that about Carvana. I have found some good deals like that Lexus on Carvana. It's
Yeah,
still on there right now. If I had the money, I would literally order it. I wouldn't even call nobody. I'd just order it because it's in perfect condition. 50,000 miles for a 6-year old car, and it's a clean title. They only want $22,000 for it. That's a good
yeah,
deal.
yeah, and that's where they're going to hit Gen Zers because they're
I don't like the
giving good prices.
dealerships. I'm in that same crowd you're talking about. I've been to a couple dealerships. I actually bought a white 2014 Nissan Altima with the sport package and the paddle shifters in
Mhm.
2020. And then my friend totaled that car, and then I got an insurance check and I bought a different car. It was a 2008 black Infinity, and I bought that from a dealership. I didn't like either of those experiences. Like to this day, guy from 4 years ago who sold me the Nissan, he still calls me every Thanksgiving and Christmas, every single year on those holidays. He still calls me. And I told him many times, I don't want to buy a car right now, and I don't want to buy a car from your dealership.
Oh yeah, I get a lot of those, especially when I was running an exotic car rental in Florida. I get calls from the the uh, the Bentley dealer all the time. It's like, nope, sorry, it's like not in a position to buy. But I appreciate you reaching out. So, but yeah, it's like the car dealerships are feeling the hit right now, and that's where Carvana is having a good leg up on the dealerships. Is they don't have dozens and dozens and dozens and dozens, thousands of lots that they're paying lot loans on. They're instead of doing lot loans, they're financing through commercial paper, which is way cheaper than a lot loan. So
Hold
if
on,
you got
wasn't that what Tether was doing? They had a bunch of commercial paper.
yes, Tether was buying commercial paper. Now, guys, when I say commercial paper, I'm referring to corporate bonds. And
Yeah, not actual paper.
yeah, so that's what people mean when they say commercial paper. It's more it can give you a better return than typical treasury bonds, but you got to remember it's high risk. So like Carvana would be high risk because there's no guarantee on that bond, and it could get paid, it could not get paid. But like if you bought commercial bonds from Coca-Cola, most likely you're going to get your money from Coca-Cola. Those are blue chip bonds. Those are AAA rated bonds. Carvana is probably not AAA rated, probably double B rated, which means there's a good chance that you may not get your money back. But what they do is they finance that corporate paper. They issue that through an investment bank like Goldman Sachs or whomever, most likely one of the big banks. They'll issue maybe like $500 million worth of corporate bonds, and then they'll take that money and then finance their inventory. That's way better because you're only paying like 4 to 6%. Whereas if they're getting a lot loan, they're paying an APY base 10 on their interest. So that's why you got these guys calling every month. If you've ever went to a car dealership just to look, gave your number or whatever, they're calling nonstop because they got to get those cars off the lot. Like what was it? The Chevy dealerships, the Ford dealerships, the Dodge and Jeep dealerships. They're stuck with these cars that they have to sell like 20K over market value because they financed a lot loan with those when they were above market value at above market value 2 years ago. Now they're stuck with them because banks aren't approving people for 110% loans, which means they're going 10% above market value to finance. Now they're saying we're only going 75 or 60%. So that means the consumer has to give like the other 25 or 30% or 35% to match that car. So if you're talking about $100,000 pickup truck, they'll finance 70,000 of it, and the person has to come up with 30K to complete the sale. And not a lot of people have 30K right now to waste on a pickup truck that's going to devalue 50% once you drive it off.
Somebody has 30K, it's for groceries and rent.
Is there? Yeah, 30K is, man. It's a lot, but you gotta realize like 30K is basically the average family's yearly budget for just food and living expenses. And we're not even factoring in the car loans into that. We're just talking about rent or mortgage, food,
Don't
just
even get me started on these young people and getting a car loan. Like that video I sent you, that girl that was born in 2005, she's like 18, 19 years old, flexing that she got a brand new car. And in the caption, she put, "This is a sign to get your money up." And that's what really made me have an issue with it. I'm like, you're telling other people to get their money up when you were only born in 2005 and you got a, what, $40,000 car loan?
yeah. Little do you know that the clients that I move for my moving company that have the money, they ain't driving that. Like a couple months ago, I moved the guy that owned his own. He owns his own engineering firm for structural engineering. He he makes. I think he told me he made roughly about 1.2 million last year. That's what he personally made. He drives a 2005 Acura.
Yeah, yeah, because
Like his,
people like him want to invest his money.
and let me tell you, his wife works for is a lawyer for a Fortune 500 company. She
I
drives a 2014 Honda Highlander, or no, sorry, Toyota Highlander. Like the people that are wealthy are not driving and wasting on high payments.
That's what I
They
keep trying to
pay
tell
that.
my mom too,
Yeah,
because she drives a 2014 Honda and she talks about getting a new car. I'm like, your car's paid off. It's reliable. It has all-wheel
yeah.
drive. You
Like
know.
I can't tell you guys how liberating it is when you don't have car payments. You don't have to worry about the. You don't have to worry about anything. Just maintain the vehicle. And as long as you follow the maintenance schedule, you'll never have a problem. I don't know what it is with everybody and trying to flex because you're just going to flex yourself into poverty with that. You're going to become broke faking to become rich. I don't understand why
Yeah,
or
it's like, how does
how
a
people
person
just
born
want to
in
do.
2005 have any credibility? How they don't even have a background of financing, 2005, like you do the math, that's like, yeah, you just turned 18, 19 years old, like barely.
Well, let's just put it this way: if you're talking about you are financing a $40,000 brand new vehicle, which means that your monthly payments roughly between 1,100 and 1,500 if you even put any money down. And I can tell you guys right now, banks will lend more money to women than they will to men.
Yup,
I can tell you that
yes.
for a fact. And it's always the ones when I worked at the Honda car dealership. Now this was in like 2000. This was right after I was laid off from Radio Shack before I started my journey. But they were the ones coming in and they had negative equity. And this was in a time where like you guys should be crying for these payments. We're talking like $291 on a Honda Pilot, which a Honda Pilot, if you guys don't know, is one of their higher end SUVs. Like $291. I'll never forget that lady. She had that car for a year, negative equity 20 grand, and it was constantly rolled over. So that behavior has just been amplified over the last 5 years. And now you got a lot of people, they can't get out of their vehicle because they're so far negative equity. Not to mention the prices and inflation has doubled everything in value because of what we did during the pandemic. It's not looking too good if you're buying a car, if you had bought a new car recently, or are getting one right now. You're most likely it's going to go to the repossessed lot. People always say get your money up. It's always get your money up until they take the car. I mean, I'm sitting here looking at my office and I'm watching them in the neighborhood outside my office go tow truck go in, tow truck come out with a car.
Especially with the job economy. Like, let's say, that girl I'm talking about, you know, like she thinks she has, like, let's just say she is making a little bit of money right now. You're not guaranteed to stay at that position. You're not in today's job market. You are just one day away from getting laid off, even if you are a hard worker. you know y- there's things that happen that are not under your control. And you're not getting, it's like some people in these positions that they think they're making money in right now. You're not guaranteed these positions with how the job market is.
Oh no.
You're not guaranteed these positions. You're not, just because you're making like 60, 70,000 dollars a year right now. Shit, next 2 years you're probably making 40,000.
Oh yeah. And it's your income progression is a lot slower than you think. Like making money is hard. Keeping it's even harder. You I hate to go keep coming back to this, but we got to keep coming back to that your money your money is going to flow and move like water, and it's going to evaporate like water on a hot summer day. You have to be prepared for it. You have to come with the right tools. You have to be able to store it properly, save it properly, because in the end, if you don't do it right, you're going to be the person who's 60 crying that you have to go back and the only job you can work is a people greeter at Walmart. And even now, like Cody and I were just texting each other a few days ago about, we noticed that all the fast food places switched over to an AI program to do the drive-through.
All of a sudden, yeah, my
It
friend,
just
my friend,
happened.
and he's been going to that fast food restaurant for years in Fayetteville. He said this was Slim's in Fayetteville, like one of the big pot. And I've noticed like they never kept employees. Like they always went through rotations. They never kept employees. And I guess that store finally got tired of it and just said, "Look, we're just going to use AI for the windows."
Well, I'm also sure using the AI better, was cheaper in the long run, constantly hiring, training, dealing with people, because you can't complain with the AI. It just responds.
Yep.
And the person at the window that's giving you food is just taking the payment. Here's your order. Thanks for shopping. Thanks for shopping with us. You know, it's like that kind of brings us, like, we're going to walk into this topic eventually, but a job is 100% a privilege, because no one has to hire you. No one has to work for you. No one has to buy from you. No one has to do business with you. No one has to do anything with you. You have to work and earn that right for people to want to do
I
something with you.
remember your mom telling me the same thing. Well, I remember Trudy saying something like that before. I've heard it.
Yeah, like it's hard to build a career. It's even harder to build a business. Way harder, way harder than that, because you're starting from zero with no big corporation basis. Like, you can make a lot of mistakes working for someone else. You make a mistake with Walmart, you might get laid off, but that'd be the worst. You just go get another job. But if you're running your business and you made a mistake and lost all your savings and everything you invested into the business, that's it. You're starting over from where you were at 18. And it's hard. It's hard, it's scary, it's rough. And I can tell you right now, there's a lot of people that started after me and now are gone 2 years after they started. It seems like a cycle. They come in 2 years, then they're gone. And it's because it's hard. It's ridiculously hard. And it's even harder to think that you're going to start a business with no money at all. Like you're just going to start with zero money involved and you're going to make $1 million. It's not going to happen. You might make a business and you might only use 50,000 for the year. So do you think after all your expenses, everything got to run for the business? Do you think you can? There's enough in there for you to survive off of. That's why a lot of people give up. You have to be everything: sales, marketing, you're the accountant, the lawyer. You got to be everything, and you got to handle everything like you're everything. So that's why people tend to give up. And I know there's a lot of people saying I'm breaking away from the 9 to 5. I'm leaving the corporate job. I'm going to tell you right now, keep your ass right in the corporate job. Keep it in there. Stay in there. Pay off your debts. Pay off everything that you possibly can pay off. Pay off your car note early. Pay off your mortgage early. Pay off your student loans early. Pay off your credit cards and start saving your money.
I just feel
Because,
like we're heading into a total. I'm not going to say we're heading into dystopia. I'm not going to be a doomer here, but I will say that it's not looking good for future careers, especially for these 18-year-old kids who took out 100, $200,000 loans for this career that they think that is guaranteed for them, just for them to get screwed over, or how in the next 5 to 10 years how the job market's going to look, even with people that have skills or degrees. Like it's crazy to me because it's like you got to learn how to. It's almost like y- this upcoming movement, you got to know how to make money on your own. Like, yes, I mean, work for a job. Obviously, a job's a privilege. A job's not guaranteed. You work a 9 to 5, but people have to learn how to make money on their own. And what I mean by that is whether working for somebody else and investing or like just being smart with your money. But it's like, it's just looking scary for careers. Even like these 18-year-old kids who took out massive debt for it.
yes. And it's not anywhere. It's not as bad as it sounds. It says like this is just an adjustment. These same adjustments happen a lot. Happened in the early 1900s. Happened with the invention of the steam engine, the cars, airplanes. When things change for humanity, the society just shifts a little. That's all. That's all that's really happening. But you guys got to understand, nobody is meant to have a carefree life. Life is not, because I know there's a lot of young people, and when I say young, I mean between 20 and 30 that are saying like, well, nature doesn't do that. Nature doesn't do this. It's like those animals fight for survival every day. They're looking over their shoulders for a predator. They're trying to find
They
food.
eat each other. What do they mean? They eat each other. If
Yes, and if
two dogs are hungry enough, they're gonna fight to the death.
oh, they absolutely will. It's like their life is paid for by their blood. They have to fight to survive. If you take away all the technology, all of society, all of the agriculture, you're going to struggle just to get 1,000 calories a day, and it's going to you are not even going to have time to think about anything else other than where can I find food? Like that's it. It's miraculous that humans came up with agriculture, which led to a lot of innovations, which now lead to us with so much innovations that make our lives so easy that all we have to do is go work. I keep telling you guys, like the dollar bill, the US dollar is not just money, it's a culmination of human effort and human
People
value
don't think
built
of it
in.
like that though. They just think the dollar is evil and full of greed.
No, because the dollar just represents human effort. Like, because if I want to go to the grocery store and I want to buy some steaks, I give him money in compensation instead of trading and bartering, because I can't go to him and say, well, I can move you today if you can give me like 20 steaks. Uh, That may be great, but
What if
then
you don't need 20 steaks?
yeah, or 30 days from now I may need to get steaks again, and I can't move him again because he's already moved. So what do I have to offer? So you see what I'm saying? That's what money really is. It's giving the value of time and effort and exchanging it for something else. That's all it is. I'm spending my time and effort to build value in doing the services that my business offers. I collect money and then I give that money to other things that I've deemed valuable for either my business or myself. And you guys do the same thing. You work and give up your time, which is very valuable to an employer to get paid. Then you take that money and you pay for the resources you deem valuable enough. Where we have a disconnect is that a lot of people, younger millennials and Gen Z and Gen Alpha, have been significantly affected by social media, Instagram, all that stuff, where people are only posting the best. Nobody posts negative stuff. Nobody posts negative stuff.
Nobody
It's always
does.
positive.
Just
Even
like that
when they,
person. Oh, I'm sorry.
no worries, Cody. Even when like they're posting like, "Oh, I just lost my aunt today." It's not negative. It's not like, "Oh, I lost my job. I lost this. I lost that. This sucks." They're not posting that. They're posting, "Life is great. I have a new job. This is great. I'm feeling great. I'm traveling here. I'm traveling there." And it's all fake. It's all fake.
Yeah, and that's why I love my TikTok. I like me. It's like I post like what is authentic. I post what is me. It's just like that person that 2005 person that got the car. I guarantee you that person will post all they want about how they got a car loan for a brand new car. They won't post if they lost their job. They won't post if they don't have the money for the bills or if they can't really afford the car loan. They're not going to repost that video and say, "Sorry guys, I couldn't afford it." No, that's too much pride.
Yeah. And what you don't realize is if that girl does not, if that young woman does not pay that loan and she goes and it gets repossessed, her credit is shot for
Yeah,
10 years. I can
that's a
guarantee it's gonna be
2024
hard.
vehicle.
Yeah, but it's gonna be hard to get another car loan. It's gonna be hard to get an apartment. It's gonna be hard. You forget getting a house. It's gonna be hard to get student loans because you shot your credit. It's very hard. And trust me, I'm one person who's ruined their credit before I started. My started trying to do businesses, and it affects you greatly. It affects you greatly. You have to really work hard to maintain that and maintain your finances. And unfortunately, it means you might have to say, "No, sorry guys, I can't go out this weekend. No, sorry, I'm not I can't do that vacation." Cuz let me tell you something, I have a lot of friends that did a lot of vacation, did a lot of all that stuff. They were saying, "Oh, we're ruling the world, we're doing this, we're doing that." Now they're like, "Well, how'd you start a business? Like, can I start with nothing?" It's like, "No, I started we start my brother, my mom and I started with a lot of money. We still work our asses off for it." And I'm watching some of my friends. They don't like the position in their life. And there's this guy, Coach Greg Adams. He I disagree with some of the stuff he has. I like some of the stuff he says, but this is one of the things I like. The position in your life, where you are in your life, is just a culmination of the decisions you have made along the way. So you can make some good decisions that will affect that outcome, or you're going to make in a positive way, or you're going to make decisions that affect it in a negative way. And he said, yeah, he was living in a car for 6 to 12 months. Not the ideal situation. Many people said, "Oh, look at him. He's living in his car." Now look at him.
Just like me, I've been
He
living with
owns
my
he
parents.
owns rental properties. He's got the last laugh. He owns rental properties, does whatever he wants, can live however he wants, and he can now do his YouTube channels with ease. And even if he talks about a topic that got him demonetized, guess what? He doesn't care. His life is fine. He's living the life he wanted to. He knew that he had to make a game plan to get there. If you want to get there, and you're not going to get there young, you're very rarely are you going to be the 18-year-old that's driving a Ferrari. It almost never happens. But you can be the 40-year-old that is financially secure, doesn't have to worry about where they're working, doesn't have to worry about paying their bills, doesn't have to worry about
Oh my goodness.
unachieving their dreams.
As you said something about that, you might be the 40-year-old in the Ferrari. This brought me up to a very good memory of what I saw. So this guy, he's a popular alcoholic on TikTok. He makes videos about his uncontrollable shakes and how young people shouldn't get involved with alcohol. He works at a Fortune 500 company. He's a CEO of a Fortune 500 company, and he used to make 100 something thousand, like sometimes a day, and he's a multimillionaire. He retired at 35. He said retiring at 35 was the worst thing that happened to me because as soon as I retired, I got on that big ego trip and I became an alcoholic. and now I am where I am today. He said, making that kind of money, I was not ready for it in my 30s. He said, I was not ready to be a CEO making millions of dollars in my 30s. And that's what turned him into an alcoholic.
Exactly. And guys, both you young women and young men, you got to be careful out there too, because if you are trying to make this journey, make sure you find the right person that goes with you along that journey. Because I can tell you right now, there's a lot of people that will use the relationship to help finance their bad decisions.
Yep.
Don't let yourself be in that position. I was
And you
that
don't date a
in my
leech.
life
You
too.
you can't date a leech, and you have to, and people don't think about this too. I actually posted something like this on my story, but I was like, people mainly want relationships for the feelings and the romanticization about it. People nowadays, more people tend to go for like the romanticizing and the feelings over compatibility, or do we have the same values? Believe it or not, but most people my age actually don't have conversations like that. They don't have conversations like on the first date. Like, let's say me and a girl my age go out for the first night. 9 times out of 10, the conversations aren't going to be, oh, what do you value in life? What are your morals? The conversations are going to be like, what's your favorite music? What's your favorite type of clothes to wear? What's this? People don't even talk about that anymore. And people my age, I'm 23. Most people, they don't talk about, oh, what are your values? Are we compatible? Like, what is your biggest? I don't see conversations like that. People, it's almost kind of degenerate. So where like nowadays, you either link up with a girl and y'all go straight to the smashing, or it's just superficial, and there's no real conversations. It's just pretty much small talk.
Hmm. Oh no, I hear you on that. I'm telling you guys.
Nobody my age talks about values. I swear, nobody has those conversations.
I'm telling you guys, you have to have that, because especially if you're in your 20s, because your 20s and your 30s are your best opportunities to build wealth, because most people don't focus on it until they hit 45, 50, and at that point they only have maybe a good 10, 15, 20 years if they're lucky. But if you're doing it at the age of 18, 19, or 20, you're pretty much putting 40 to 50 years of buildup on your table for your money. And if you start investing at 18 and just passively invest, even in mutual funds and index funds, you are going to make more. And this kind of brings me into this next topic. I want to kind of showcase this for you guys. So here's the Dow, right? Let me pull up the all chart so you guys can see. So you're looking here from, let's just pick Tr- uh, Trudy. So she graduated around 1982, right? So here's where the Dow was. If you were Dow, if like she was just putting money consistently into that, she would have made 1.5 times passively while putting in there. And that's not counting for dividend reinvestment, all the stock splits and everything. So really, it kind of comes out to almost 3 or 4 times what you put in. But I also kind of want to showcase this because I want to showcase this for you guys a little bit, because a lot of people talk about the 2000 crisis, 2008. Here it is, right here. This is that epic drop. You know how look how small that is compared to everything else. It's a little drop right here. Little drop. Here's where we started to run up, right? And this was the pandemic right here. This is the economic decline before the pandemic really hit, right? Now look at it. Oh, we're starting to go up again. Up again. It, it's only going to be on an upward trajectory, whether you start now or if you started earlier. You are, if you just invest your money, and I strongly recommend Betterment and Wealthfront for you guys, because they're a little bit better than index funds. They got their own funds that they input your money into, and they do it very well. And it's managed by an AI program. You put your money into that. You don't over leverage yourself. You pay, like if you get a car loan, pay off that first before you get the mortgage. When you get your mortgage, work hard to pay that off as quickly as possible before you get any other a new car, things like that. There's nothing wrong with driving a 30-year-old car that you're taking very good care of. And whether if you think that people are looking at you, poking fun that you're driving an old car, nobody cares. Nobody's even paying attention to you. Everybody's got their own problems to deal with.
However, I will play devil's advocate on that one and say when I drove, you remember that Toyota I had? It didn't have a back window. And I
Yeah.
drove that car. I bought it off my dad for $1,500, which I think he ripped me out on. I should have got it a lot cheaper than $1,500. Anyway, um, yeah, I remember driving that, and I'd be sitting in the parking lot, and I'd hear people laughing at what I drove. They're like, "How does he drive that? Like, there's not even a back window." People would be laughing at me, like I remember I remember going on a date with somebody and it was awkward because the back window was out. Like having a woman in my car with the leather seats all ripped up, there's no back window, the convertible tops just flopping everywhere. I mean, dude, people acted like I was the biggest joke for driving that car.
Hmm. But it's better to have a hoopty than to have an
Yeah,
$1,800 car note and no money
I
in the bank.
do. I do agree that yeah, people genuinely don't care about what you have. I do agree that nobody really cares, but at the same time, if you're driving a hoopty, that's when you know shit like that can happen. But it's like you have to really not care. Like even at 23, there's times I'll get in like a good manic episode and I'll be like, yeah, I don't care what anybody says about me. But sometimes I fall into the trap of caring about what as humans. It's like we have to put ourselves in check.
Yeah, absolutely. I'm going to tell you guys a story. I was working at Furniture Row, right? And this was the Furniture Row in town. Now, if you don't know anything about Arkansas, know this that there's a lot of chicken farms out here, and chicken farms stink. They're filthy. Farmers aren't really the most visually appealing of people. But this couple came in. They were dirty. They must have stank because I can't smell. So I'm guessing that they also stank along with it. And nobody wanted to deal with them. Everybody did just kind of brushed them off, quick, answering quickly and then running off. So I decided to help them. I answered all their questions. It was like a 2-hour conversation we had with them. Everything was going great. Like I think about $90,000 worth of furniture they ended up buying from me. About 90K worth of furniture to because they were furnishing a brand new house that they had built. They built this like 15,000 square foot house out out by one of their biggest farms, and they own 10 chicken farms, and they were making about after all said and done, they were making about $2 million a year off their farms as profit that they could pay themselves. You would not have known it by looking at them because people's perception is, oh, you're dirty, you must not have any money. And that may not be very well necessarily the case. There's a lot of wealthy people. I've been saying this on almost every live that we have that you walk past more millionaires than you think in your life. You probably walk past several dozen going through Walmart. You don't know because someone who worked hard for their money doesn't buy flashy stuff. They're wearing Walmart clothes, JCPenney clothes, Target clothes, clothes from Kohl's. They're not wearing a Rolex. They're wearing a Casio, things like that. Now I understand. You might work hard in your life, and they do work hard, and they might buy like the Corvette they've always wanted, the nice house they've always wanted, but their everyday life stuff, like you don't see them decked out in Louis Vuitton. You don't see them decked out in Gucci because they're taking the money instead of buying BS products with it. They're constantly reinvesting their money, and the true wealthy elite, they're wearing stuff that you'll never even know that was expensive. Like you can go to New York City, you'll see someone walking down the street in like Soho, and you would think like, oh, it's just a regular person, but little do you know is that brandless shirts like worth like 30K. That's true. That's true. Those are like the upper echelon. But most millionaires, especially people who came from the bottom and worked their way up, they're not wasting their money on that stuff. They're not. And if you don't believe me, that most of them are more like Dave Ramsey, and you wouldn't recognize Dave Ramsey as a millionaire if he didn't have his own, if he didn't have a public personality. I I don't know what else to say on that matter. And if you guys think it's like stocks ain't the thing, it's like, yeah, it might be at its all time high right now, but if you look at this graph, every year it's been at its all time high, minus some of the dips, and the dips were felt bad at the time, but aren't really bad in the long run. They're just good opportunities to really buy and dollar cost average in. If if you had dollar cost average in at 2008 and just said, "Hey, I'm going to work two jobs and put one job's all its earnings into an index fund," you would have doubled that money, and that you probably would be not stressing now because you have doubled your money where everyone else is spending their money away. So I mean that this was kind of our last topic that we wanted to talk about. Because it seems like Gen Z and the younger millennials are going to suffer the worst in this, and it's mainly due to lack of financial education, lack of understanding of how money truly works, and and the lack of the understanding of you either sacrifice today for a better future, or you sacrifice your future to feel good today. And many young people, myself included, fell in that trap of sacrifice your future to do today. And some of us can make it when we hit 40. We might be able to turn it around just in time, but that's a whole load of pressure you don't want to deal with. If you're young and you're watching this and you're 25 and under, now's a good time to start taking your finances seriously. Stop wasting the money. Stop. Like, I've known some young guys that spend three, four, $500 of their checks as soon as they get paid, going down to the bars, going to clubs, wasting the money on high interest loans. You're not going to survive being able to do that. It's it's just not you. It's just not sustainable, and eventually you crash, and then you have to start over. And you might be starting over at 30. You might be starting over at 40. You might be starting over at 50. You might even be starting over at 60. If you don't want to start over at 60, then it's time to start taking it seriously when you're in your 20s and 30s. 30s, you still have time. You can still do it. There's a lot of paths you can take, and you have to learn to sacrifice certain things to be able to have the future that you want. But with that said, guys, I'm going to be calling. We were on for an hour and a half. Thanks for watching with us. Really appreciate all the viewership. Hopefully, you guys will be back on for tomorrow morning for morning market news. If you guys want to go to our YouTube page, you can check out all the replays, all the videos there. Really appreciate you guys joining in. If you guys can hit that like and subscribe button, help us get to 500 subscribers. We're almost there. We're at 374, I believe. So help us grow the channel. As you guys know, Cody and I just love talking about this stuff. And the more people, the more merrier it is. So with that said, guys, I will check you guys later. Stay safe and don't invest your nest